Hello everyone, so I welcome you today on this streaming session. I'm Stan and I will be your host today in this session. So yeah, this session is provided by Exness, so don't forget to subscribe. Every Tuesday the same time we do streaming sessions live here at Exness, watching the markets and going through the most popular trading instruments. So yeah, and the same is with this week, so we will continue watching the markets, providing you with some ideas, and also the disclaimer that this is not a trading and investment advice of any kind. So what you'll hear today is intended for the purposes of education. So just give me just a second, I will try to figure out what's happening with my microphone. All right. I hope that this sound is on. All is working well. Sound should be on, I think. All right. Give me just a sec, so we will start in less than a minute. Be on, I think. All right, I think everything is working correctly. So the streaming time, ringing the bell, and starting our session. Without further ado, let's go straight to charts. And yeah, here you see the Exness terminal. By the way, so if you haven't seen it, check it out. So it's really convenient. So we can make trades here. So yeah, we have charts here. We have the feature of risk management here. So if you want to, for example, establish the position, so it's pretty much convenient. All right, so let's get started with understanding the markets. What's going on here? We will watch the charts a little bit later. Usually we start with economic calendar because that's the way we get prepared to our trading week. So just give me just a sec. I will quickly re-establish my display capture in order to enable that you see everything. All right, that's economic calendar. All right, guys, so this week is basically the short week because of July the 4th, which is the holiday in the United States. July the 4th, Friday, holiday in the United States. American markets are closed and markets will be trading thinly without substantial advancement. So the NFP indicator publication, non-farm payrolls, will be published on Thursday, not Friday as scheduled. So this week it's Thursday. And here it is. So you see that in economic calendar. Non-farm payrolls, 2:30 p.m. GMT plus 2 times. So GMT, that's 12:30. It's going to be published on Friday. So it's expected to be at a level of 110K approximately. So that's the approximation of trading economics. But also that's a consensus forecast. So if you click it here, you see that the employment numbers have been solid for a long time. So they haven't been declining. So they have been keeping at a steady pace. So all right, and that's what we see. By the way, they have a poll, so let's vote maybe. I vote that it will be below 139K, all right? But we don't have a login, so whatever. Whatever. All right, so that's the main publication within the week, because usually it's a leading indicator. NFP, employment, unemployment, these are leading indicators. They serve the purpose of forward-looking indicators. For example, in comparison to GDP, which is also important, but it looks back for 1 or 2 quarters in order to understand what was happening in the past. So NFP is pretty much analyzing what's going on right now because it's just the previous month. In financial markets, what was happening in the previous month, so that's as fresh as today. All right, so nothing is actually expected here, nothing substantial is expected here. So as today is Tuesday, sorry, tomorrow on Wednesday we got some data for the crude oil. So as usual, because every Tuesday they publish data on the crude oil, stocks change, petroleum status report, and etc. On Tuesday which is today. So we will get Fed Powell's speech at 3:30 p.m. GMT, so 1:30 p.m. Greenwich time GMT. So ISM manufacturing PMI index. So that's manufacturing PMI index. It has some correlation with S&P 500 index. So previously it was 48.5. Well, usually everything which is above 50 is considered good. Now this indicator was not holding well above 50 for several months in a row. So you see that there was an uptick in January, then it got back in February, March, April, May. So this indicator should have some correlation with S&P 500. So whenever it keeps below 50 for some time, so usually that provides pressure for S&P 500 index. But the main agenda, of course, for S&P, it's not ISM, it's not PMI, but it's tariffs, the situation, the deadline for tariff situation. So if you go to Bloomberg, for example, everything, so on Bloomberg, tariffs are on the main agenda here. July 9th is the threshold for tariffs, and so everybody is expecting the big beautiful bill, as they call it in the United States, might be implemented or not. And the situation with tariffs is what actually is concerning about the market. So that's a politics, that's not geopolitics, but that's a political type of thing. So that's why what we see here is the extreme cautiousness of the market towards the American dollar. So you see that it's declining, so it's continuing its trend. So every day it's declining pretty much. So because the market cannot get any clarity about the tariff policy, and sell American narrative is dominating in the market. However, it's not visible across the board. For example, the compensating trend was visible on the stock indices. For example, US 500 and Nasdaq, they have been climbing in new peaks. All right, so you see as Nasdaq, for example, so it's a new peak, which is not visible, by the way, with the German index, with DAX, for example. It's not visible completely, so not the same thing. Well, given that we got UK 100, which is FTSE, so also it's not climbing to a new peak. The same with Nikkei Hang Seng. So Nikkei probably is climbing, but it's far from the new peak. So it was climbing last week, but it's far from the new peak. So I would say that US Tech, the Nasdaq index, and S&P 500 still remain to stay the main drivers behind the price action. Stocks get back in play right now. That's what's happening right now. So sell American narrative might be still in play, but not completely. So I mean that still stocks are starting to go up, even though the American dollar is not reacting that much, so it's still under pressure. By the way, of course, it's represented in the form of rise of Euro USD. So it's same thing, Euro USD is climbing every day, pretty much every day. All right, so that's the narrative, that's the main trend. So let's take a look at the performance of the FedWatch tool. So this tool is provided by the CME Group, the Chicago Mercantile Exchange, and we can try to assess probabilities of interest rate change in the United States with this tool. So speaking of July, for example, 79%, 78% of traders think that interest rate will not go down in July just yet. But as for September, so everybody's projecting one-step decline, which is between 4 and 4.25. So that's one-step decline, a quarter point decline. What we care about is change of probability. So you see for September, after the previous week's GDP publication for the United States, probabilities has started to move down. So nobody is expecting any hawkish scenario from the Fed. So nobody is expecting that. And it's moving down basically. So that provides additional pressure for the US dollar. And that, by the way, as you see, is correlating with the rise of S&P 500 and Nasdaq indices. So that dynamics is visible here. So we can say that some easing is coming to the market, some monetary easing, some quantitative easing is coming to the market. It's coming to the market. So what we can conclude out of the situation? So gold might be in play as a result. Gold might be in place, so you see that the second day of trend is visible for the gold market. So it had bounced off the the previous low, which is located right below the 20-day Bollinger Bands. So that's a support line or support zone, if you will. It starts to climb. So gold is climbing back again, and that's the second day of the growth. So usually that's the continuation day. So that's incredibly difficult to join such a trend when it goes, above, because in this case you're supposed to make a momentum trade. So today probably, it was not today, it was yesterday. Yesterday price had touched the lower band of the Bollinger Band, so had given pretty good entry, but today is not, we don't see any substantial, good entry point yet, because it just climbs and climbs and climbs all the way up. So if you buy it at the beginning of the day, in the night, so in the night on the American on the European time zone, so probably that would be the good entry point. Otherwise it would be pretty difficult, to buy it, because you may see the correction every time. So whenever you buy it, so it might correct all the way down every time when you buy it. So, and it's not wrong, so, because corrections, liquidations, they happen all the time. But I think now you should probably wait for some time until it gives you the better entry point. Maybe it corrects back to the Bollinger Bands, something like that, okay? And maybe that will be a better entry point. So by the way, Bollinger Bands is a simple indicator which measures two standard deviation from the 20 period moving average, and it might be used as an entry point, because what we want to do in trading, so we want to buy, let's say, at the bottom of the range. We don't want to buy at the peak of the range. Momentum trades really work. I mean, if you buy it at the beginning of the day, that's fine. So for day trading, that is fine. But if you want to, for example, follow this trend for some time, maybe holding your position onto the next day, so that would be incredibly difficult to jump in. All right, so gold is following this quantitative easing, or it's not quantitative easing to be exact, it's I would say monetary easing, better to say monetary easing situation, when the probabilities are moving down, so everybody's expecting the interest rate to move down, so everybody waits for Jay Powell to speak today, by the way, and gold is reflecting this situation. All right, so what about silver, for example? So as gold is reflecting this situation, silver is also, correlating with gold, so it's bouncing off the support zone here, right? It's not just the 20-day moving average, it's also the bottom of the Bollinger Bands, and it's also, you see, the kind of bottom of the wider formation here. So if you will, so we can outline this formation, and now it's trying to break, and the development might be visible, for next couple of days. So gold, silver, precious metals, they are all in play. For example, platinum, palladium, so everything is pretty much moving in the same direction. So for example, you see, again, you see palladium, you see platinum, so the group of precious metals is moving with a good momentum, with a decent momentum. Okay, so that was June 27th, the Sunday. So we got 3 days of, for example, we got 3 days of correction for platinum. Maybe tomorrow, we can think of buying it, so that might be potential pivot point. So because you see, that's the same pattern. Once it establishes the peak, so then after the third or the fourth day, so that's a potential entry point in the direction of a trend. So that's a cyclical behavior of platinum, which might be used for trading, actually. So at least I'm monitoring this market because it's pretty strong, so it can advance really nicely to the upside. All right, so let's read chat a little bit, because we got chat here. So guys, by the way, you can drop your messages in chat, so I'll appreciate if you do that, so we can communicate a little bit. Which city are you watching this streaming for? City, country, please let us know. We got India. All right, trading USD Swiss franc. All right, so we will go through USD Swiss franc a little bit later. I want to be a good trader. How can I? All right, so how you can be a good trader? It's a good trader is constructed of several things. Basically, so you got to develop several skills. The first is analysis, then risk management, and then execution. Execution is knowing the strategy, meaning that how you enter your positions, or when you enter the positions, when you place a stop loss. So in other words, you need to pick good trades with relatively small risk in comparison to your potential return. So if you do that consistently, so you might provide the pretty good flow of trades. And risk management is the key, of course, because too many times traders just don't care about the risk management. They don't know how to calculate risks. They don't observe risks, and that serves as a reason for many failures. First, if you want to become a good trader, learn the foundation. So learn how to calculate risks in the first place. So even if your strategy is not working at the time, so you will still be able to keep above water, to hold your capital, so to not let it draw down very quickly. So and later you will be able to maybe recover. So the risk management is the key here, because in trading we risk money, and that's why we need to protect our capital, to learn that. We got Zimbabwe, Canada, oh really? So that's unusual to see anyone from Canada watching from Canada. All right, whatever. Thank you guys. Moving on. So let me sum it up a little bit for gold. So now it's the second day of consolidation, second day of the growth, and market is coming closer to the 20-day moving average. So we will see whether it will be able to close around this level or not. In such situations, of course, I would prefer to open positions relatively early to capture a swing. But now it's not the option, because today, market has not given any decent entry point at the beginning of the day. All right, so what else is visible across the board? Bitcoin tried to develop the swing, to maintain the swing yesterday, so it was not successful. So it was trying to keep above the 20-day moving average, which is 106 or 106,000. So it's not possible yet. So as you see, yesterday there was a red day with a continuation to the downside. So it seems that it's just locked in a very, very narrow consolidation. So it can't get out of this consolidation. And no drivers, no narratives are being visible here, though it's still a bullish market. So everything that is positioned above 100,000 is still a bullish market. So the main question is when the market will be shaking off this trading range. And that's a really good question, because nobody knows that, and currently, so that's the behavior of Bitcoin. So as you see, it behaves like that all the time. So for example, after initial rally, it might stand inside of this range for the long time. So the latest thing was between November 2024 and February 2025. So already for maybe 4 months before the shake off and before the completion of the next rally. Now we see the same consolidation. So market is closed again in the same range, though at a pretty high price. So above 100,000, so that's pretty comfortable for many Bitcoin holders. They're sitting in the profit. So many cohorts, short-term holders, long-term holders, everybody's in profit. And they're feeling pretty comfortably in this situation. All right, so what's happening with currency pairs? Let's go through currency pairs. Euro-USD. Euro-USD is at the peak, as I've said, so that increases some probabilities for the correction, because this market particularly doesn't hold for too long. Speaking of the average duration of the rally. For example, just take a look at the average swing, 10 bars or 10 candlesticks. Even if we go here, $21. So 21, that's what was pretty high, but there was a small correction inside, as you see. So there's a small correction of several days, or 4 or 5 days inside. So yeah, it's visible here. So if we take a look at the big swing, which is going on here, of course it's already 42 days. But if we're speaking of the small swing, which is visible, so it lasts only for 9 days. 9 days. So I think that Euro-USD, so if you take a look at how many days it has been completing without the correction, it's visible that this was maybe no longer than 14 days at a maximum, at the biggest type of swing. So this is 17 days, but it started with a correction inside. So if you take a look here again, 8 days maximum, maybe 14 days, but again there was a small correction inside. So I would say 9-10 days is the maximum for Euro USD. So probably we are on the verge of the correction here for Euro USD. So at least it might be overbought a little bit, speaking of the move which lasts without any corrections. So we got to be very careful about buying it. So that's a problematic zone for growth for Euro USD. And the main question, or the good question, can we actually short it? Can we sell it? So it's not clear yet, because shorting against the trend is a hard thing, because you start doing that and you find yourself whipsawed by the markets. When you think that it starts going down, so immediately you get a new stop loss. It starts moving down, you get a new stop loss, something like that. So before correcting, market can actually capture your stops several times, and that might be pretty frustrating. Alright, so what else is visible? So other than the declining American dollar within this week, what else is visible? For example, speaking of the yen, right? So USD JPY, speaking of the yen is starting to strengthen. And what I want to show you is to go to 30-year 30-year yield of Japanese bonds. And you see that it's keeping at a pretty steady pace. It's steady level, so 2.8%. So the peak was 3.16, sorry. So now it's 2.9. So it's keeping pretty steadily, but it's not moving down nor moving up. So yields are pretty high. So it's keeping at a pretty high level. Everybody's expecting the Bank of Japan to raise the interest rate in September. So it's not quite clear whether it will happen or not. But currently, so at least the capital steadily flows into the yen. By the way, the same as the Swiss franc. They act as a safe haven. This still is a low yield currency in comparison to American dollar, for example, in comparison to euro. But we see that safe haven assets are still attracting a lot of capital these days. So it cannot sustain the action. So whenever it tries to go higher, so it just falls to the liquidation. It starts reversing down and moving in the direction of the trend. So this is the tendency of this year. Safe haven assets, Japanese yen, Swiss franc, they attract much attention. Even though for Swiss franc, for example, there was a zero interest rate. So last week, it was a zero interest rate announced by the Switzerland central bank, but now still we got it moving up against the American dollar. So that's what we see here. Well, American dollar is still declining, but not just the dollar, but if you see euro versus franc, the same situation too. So franc is feeling much stronger than the euro. So let me just remove unnecessary details. All right. So that's the dynamics, that's the behavior. I genuinely thought that market might be shaken off to the upside from this range, because this range was a pretty long consolidation starting from April. Not very long, but still pretty long. So the shake off might be visible, but we never knew in which way. So the ATR, or the volatility, historical volatility, was at the bottom, meaning that the breakout was around the corner, but breakout to the upside has not happened yet. So franc is still getting stronger and stronger against all currencies, which means that safe havens are still in demand. Maybe the situation will change, maybe it will get back, but currently, at least for now, so I would not trade against the Swiss franc, I would not trade against the yen. So conversely, if you like to trade, for example, with the yen, so you might do this day trade, but you gotta do that carefully, because now it's at the bottom, so it's not the good entry point anymore. The potential entry points were at the top of the Bollinger here. Somewhere around here. All right, but now it's at the bottom, so it's incredibly difficult to time the trades at the bottom. So if you enter the position, well, again, it might move down to some extent, but then later it might consolidate. So absolutely, it's not a good entry point yet for the USD JPY. So if you want to enter, I think you need to wait for some kind of consolidation, and a false breakout of this consolidation may be shown here, maybe something like that. Well, or even like that. Or even like that, okay? By the way, that's the same pattern which we've been discussing last time for gold, by the way. So gold was moving down. Also on the way down, it was forming the consolidation, and we've been expecting some breakout of this consolidation, something like that. So I would expect maybe some wider consolidation, and I will be looking for the potential entry maybe here around this level. So that would be my take on USD JPY. So at least I don't chase the market on the lows. I don't chase on the lows. Though the yen and the Swiss franc, they're still attracting a lot of attention these days. All right, by the way, speaking of gold, so if we transition back to so let me go back to gold. I wanted to show you one thing. We've been discussing this opportunity that gold might do the same, basically. So I've been expecting that it might break the peak and move down. So that has not happened. So market had plummeted without this retest. But that's okay, because in my trading, I just expect I expect the smallest risk possible. So I want to catch something of a bullish trap, something like that. By the way, it was visible in the silver market, I think. Transitioning back to silver. That was the exact pattern that silver had shown. Sorry, it was not silver, so let me just check. Oh, it was not silver, sorry. Okay. All right. Whatever. So yeah, I was thinking about the other market. Maybe it was platinum or something like that. Later we'll figure this out. All right, but if you want to join the trend, you either join early or on the pullback, or you expect a wider consolidation. So market may transition to a wider consolidation, so going back and forth within the range, then testing the border of this range, and then after the test is unsuccessful, so there you go, you might enter the position. So because the market will be ready for the new leg down. Until then, I think making or keeping patience is the key here in such a situation. Could you buy USD JPY, for example? Could you buy American dollar versus yen? Well, that's not clear yet, because the trend is down. So opposing the downtrends or strong uptrends is not easy at all, because sometimes you may get lucky, but in many cases you are about to get a second bottom and third bottom, and your stop loss might be whipsawed very easily. All right, so let's speak of indices. So stock indices, Nasdaq, S&P 500, they're on the good go today. So they're making pretty decent rally. So, and the main question is whether it might be continued or not. So to understand that, let's go back in history and try to figure out the behavior of Nasdaq whenever it reaches the new peaks. Well, Nasdaq is the index. Well, sometimes it is pulling back to the range after establishing the new peak, not immediately, not quickly, but sometimes it develops the rally. And in more cases than not, it develops the rally after establishing the new all-time high. So it might not be that easy, because it might need to consolidate a little bit before going to the rally. But at least what I think is that the upside consolidation is still would be the choice here. It's not that we immediately jump in the position, but maybe after some kind of, at least of a small correction, we might have another wave up in this case. So that, by the way, might be pretty good intraday trade. So you see that market is moving up, so it consolidates, it corrects a little bit. So what you may do here is to patiently wait until it forms at least of some kind of a pattern. Maybe we'll try to break it to the downside, and then the pattern will be broken to the upside. So that's very easy trend following pattern, by the way, guys. So that's not That's not difficult. That's easy trend following thing. You don't fight the trend, but also you should not forget when the trend is at the new peak, when the market is at the new peak, historical peak, I mean all-time high. So it's incredibly difficult to hold your position for several days. So what you can expect here, what you can reasonably expect is the sharp continuation, the fast continuation of maybe 1 day, maximum 2 days, and that's it. You get out of your position quickly. Again, this is not a recommendation, this is not an advice, so that's how I view the market. So you might do your backtest, do your research, see whether it works or not. So the best way is, by the way, is to do, replay. Go to TradingView, for example, make a replay to replay such situations. For example, US Tech. So for Nasdaq, you can use US Tech easily, and whenever it reaches the new peak, so you can do the replay. So absolute, that's free on all accounts, and you can retest your strategy here whenever market reaches the new peak. So that's how you build a conviction in the market. For example, in many cases, if we do the replay, in many cases the continuation was successful for a couple of days more, but in many cases it just flips down inside back into the consolidation. So that's how it works. I would bet on the direction of the trend, on the continuation of the trend, because not because the trend is your friend all the time, but because usually when the market gains some momentum, when the momentum is driven by the strong sentiment, and we had that too, so that was resolution of the Middle East crisis between Israel and Iran, and market is expecting now tariff situation to be a resolution of any kind. So more logically would be to see the continuation or culmination rally or something like that moving to the upside. Alright, so that's what about Nasdaq. So the rotation between indices is visible. For example, Nasdaq is going up, but for example, DAX is not going up. The same stands for FTSE 100, the same stands for Nikkei. And the main question is, maybe that would be wiser not to chase Nasdaq. Maybe it would be wiser, for example, to stick on some positions for FTSE or for maybe DAX, which is D30. Well, I would say that this is a rotation of capital, so it's clearly visible, because previously, for example, between April and June 2025, so DAX was on the rise, so it was going up and up and up. Now it's retracing a little bit since June 2020, since June 20th, but Nasdaq is gaining much greater momentum right now. Much greater momentum. So you see that the rotation of capital has happened here, so it's visible. It develops the greater momentum, the more sustainable momentum. So that's the rotation of capital. It's clearly visible here. So I would stick to something that moves. I would stick to something that is strong here in this particular market, which is Nasdaq in our case and S&P 500. All right. So yeah. By the way, guys, you can drop me in chat what exactly are you following, what markets are you following, and looking forward for your answers. So which market are you following right now, so we can go through that. Sir, I want to buy a Lambo, but I have only $10. Well, that's a good question, I think.